Welcome back, traders. In this video, what I'd like to do is break down the all-new ATR trailing stops indicator from the community scripts in the Tickblaze platform. Now, we're really excited about this because we've just released the all-new ATR trailing stops indicator, and there's many different ways in which you can use this for your trading. Now, first and foremost, this is a community script, and these can be found inside the Tickblaze community under scripts, and you can also click the link below this video, which we'll put in the description, and you can go directly there to access this. And when you get the community scripts, you'll be able to see the description, some screenshots, a write-up on the indicator, and then basically there's going to be a section of raw source code as well as the zip file, which you can import into the Tickblaze platform. Now, what I'd like to do in this video is I'd like to teach you just some of the basic concepts that are used with this type of an indicator. And it really depends on if you want to use this for an entry strategy or if you want to use this for a trailing stops indicator. Now, the name ATR trailing stops was designed for volatility stop loss placement. But then what happened over the years is that a lot of the traders started to realize that there's some really powerful trading signals that could be used interchangeably instead of a trailing stop solution. So what we're going to do is I'm going to just grab my trusty old draw tool here. And the first thing I'm going to do is I'm going to identify the first method. And this is going to be for the trailing stop, okay? And essentially, when you have an opportunity where the market is trending like this or like this, a lot of traders always wonder, like, okay, when should I trail my stop? When should I, move my risk management, etc. Same thing here. The market was trending off the open, right? Went into a little bit of choppiness, and then it broke down into a trend. Went into a little bit of choppiness, then broke back up into a trend. And what a lot of traders will do is they will set the settings. You have the ability to set the period. You have the ability to set the width of these bands. And what a lot of traders will do is they will trail their stop below the midline. Some traders will be a little bit more liberal and they will trail it on the outside of the volatility bands. But most traders are going to use this trailing stop as an indicator, okay? Now, what we've done differently, and you can see this here too, you can see you could have trailed the stop loss down, could have trailed the stop loss all the way up to the close. But what we've done is we've identified that around the midline of the trailing stops indicator, there's like this hidden force field of volatility. And we call this the buffer zone. And the buffer zone is designed for you to understand that the market's not perfect, right? Sometimes the market will come up and touch the midline. Sometimes the market will come up near the midline. Sometimes the market will come up, overshoot the midline. Well, why is that? Well, around the midline, there's what we call a buffer zone. And inside of this area is the support and resistance. And you see this quite actively, right? You see the market breaks through the midline, comes back, touches the buffer zone, gives you a good pullback trade, a good pullback trade, good pullback trade, but it never touched the midline. Same thing here, it broke the midline, immediately retraced for a pullback entry, okay? Broke the midline, immediately retraced for a pullback entry. Same thing here, if you didn't enter here, broke the midline, immediately traded back into the buffer zone for a pullback entry. Look at this pullback right here, right into the buffer zone, right into the buffer zone, right into the buffer zone. So a lot of times, it's not about getting the volatility perfect. It's about stress testing the indicator based off the market's movement. The way you use this on a time chart would be different than if you were using it on a Renko chart or a range chart, right? Now, the second signal is going to be the break trade. Now, the break trade is ultimately every time we break the midline, right, or here, right, we go long or short relative to the color. So in this situation, we broke the midline off the open, we turned blue. You would buy the market here and you would trade this all the way until it broke here again. Now it broke here again, you would trade it till you got here, you would take a very small stop loss. It broke here again, you would trade it here, you would have taken a very small stop loss. And that happens in non-trending markets. But what happens when the market kicks in is that you get an opportunity to go short, you trade it short here, you put your stop loss above the midline, and then it rips to the downside. Same thing here, you go long here, You might have taken a profit, but you put your stop loss here. Same thing here. In choppy markets, these types of indicators are not really that favorable, depending on how you set the setting. But it's when you catch the break and you catch the big moves, that's what these types of indicators are designed to do. Now, the third thing, so the first one is the trail stop, right? That's the stop. The second one is the break trade, which is you get short or long at the break of the midline, okay? The third trade is the pullback, and that's to the buffer zone. So a good example would be we broke it here. If you didn't take the entry long, you would enter on the pullbacks into the buffer zone. Now there was a pullback right here. You may not catch that, but it caught that very, very quick after that break. A lot of times the market will break the midline and then come back to retest the buffer zone before it rips. Did this off the open. Broke the midline, test the buffer zone, bingo, right? Broke the midline, test the buffer zone, wham. And this happens. Now we have the ability to go in and change the buffer zones. We have the ability to go in and actually change the settings. So what we do is normally we don't change the period. It doesn't really have a big impact on the indicator, but what does have a big impact is the multiplier. So normally if you were to decrease the multiplier and you hit this, you're gonna see just noise everywhere. But then you increase it to say 4, take a look. I increase it to 5, take a look. We have the ability to increase the strength setting of the indicator, which means you eliminate the chop. And so this is very, very powerful. Why? Because when you increase the strength of the midline, okay, I'm gonna just put this over here. Let's just say let's just go like this. See how this choppy price action is in here? If I just keep increasing this size, one multiplier at a time, look at that, just one multiplier, and I've reduced the lag all day. This is the power of the ATR trailing stop, is that a lot of traders don't realize how to set the indicators properly. And what we do with this is that you have two trades here. You have the break trade. When you set these big like this, you're not going to be using this as a trailing stop. You're going to be using this as a trading system. Normally the trailing stop will be tight. You'll keep it trailing the trend and you won't be using it for entries. You'll be using it only for trailing stops. But if you are trying to use it for a trade, right, the really powerful trades are the break and the retests. So when you get a really big break like this, almost always it comes up to retest the buffer zone and rips. If you get a break, you don't enter on the break. You wait for it to break, wait for it to retest, and then rip. Those are huge trades. We didn't get the retest here. The market broke, it just consolidated. If you took the entry here, you would have been able to catch a little bit of a profit, but it didn't really give you much. But if you take a look as it broke short here, a lot of traders are gonna get sucked in here. Look at this, zigzag, retest to the buffer zone, and bam. Breaks the midline, don't go short, or don't go long, excuse me, pull back, wait for that. Your stop loss goes right here. That's extremely good risk to reward, right? Same thing here, your stop loss goes right here, right? Entry here, that's a great trade. There was 2 banger trades last Friday and this indicator caught them both. Now this is a free script. This is a free indicator for you to have fun and play with. Like I said, you can use it for trailing stops. If you are using it for trailing stops, you're gonna most likely keep it tight to price. That way you can squeeze the market. But if you are gonna use it for a system for trading, I would highly encourage you to change the multiplier so that you can ultimately see the break and retest. Now, the last thing I wanna mention is the buffer zone. Okay, so I'll give you an example here. Take a look at how the market came into this buffer zone, but it never pulled back into here. You might have missed a huge leg of the trend. So what you can also do in combination with changing the multiplier is you can go down to the band setting and you can change the band multiplier, which increases or decreases the buffer zone. So let me just increase it to like a 2. Okay, let's do this. You can make it wider. Let's increase it to a 3. There it is. So you had the ability to increase it for both. And you'll notice here we didn't get it on the open here, but that's just because it was the market open and it really didn't give us much price action. But take a look at what happened here on this. We caught the buffer zone with a great entry. So just so you can see here, this breaks, You say, okay, wait for the market to pull back. You would have entered here, stop loss here. But it also gave you a pullback entry right here where you get a stop loss here. So this is the power of changing the buffer zones. Here you can see you would get short here, you'd put the buffer zone right there, you put your stop loss there, right? And same thing here, if you were trading this setup, you don't take the break, you would have been waiting for an entry here, but as the market traded up, you would have taken a pullback entry here, okay? And then your stop would have gone here. You might have got ticked out, but if you didn't and you had your stop a bit wider and you see the break here, you just get out of the trade because you don't want to be on the opposing side of these bands breaking. That's a very dangerous situation. And you can actually use that to your advantage. If you're in the market and you just have this on your chart, and you may not be trading it as a system, but if you start to see these volatility shifts happen, you can almost bank your butt on it that you're going to start to see a transition in the market, right? If you see this change from blue to red, that's because the volatility is changing hands, and this is a tool that tells you that, right? It's almost leading information. If I'm sitting here like this and I can't see the market and I'm going like this, right? And if I'm zooming in and I'm looking at the market like this, and all of a sudden I see this switch like this, right? And I see that red, I'm already thinking in my mind, okay, the sentiment is changing. We may go up a little bit, test that, but there's a good likelihood we're gonna drop. Right? And that's going to act as major resistance. Same thing here. If I'm trading down, and all of a sudden it breaks, my mindset is going to be, okay, if this breaks, this is major support down here. This is extremely powerful support. Sure enough, boom, come down, test it, and there she goes, right? These are really big trades, and it's a very easy way to assess the market. Very easy, very clean, very reliable, because it's based on volatility. And the only two settings you need to worry about is changing the multiplier on the midpoint and the multiplier on the buffer zone. So if you liked the video, leave us some comments below. If you'd like for us to do some live training, or if you'd like for us to do a deep dive strategy session on volatility sessions and trading volatility bands like this, we'd be more than happy to do that. Get social in the community on the script section. If you're a developer and you want to enhance the script or change the script or do anything with it, you're more than likely going to access the source code in the community. But hopefully you enjoyed the video. There's a great primer on the ATR trailing stops indicator and strategy, and we'll see you in the next video.